Right, so this gold, I mainly trade gold, and let's see how I usually start it. And I want to do a very random day, and what I can do is do this so that I may have a replay. I know really where I will be stopping that, and ensure that everything is cleaned up right then. So this goal, and usually what I want to do is mainly start off the daily. If I can't see anything, then I can draw onto the 4-hour time frame. But currently this was on Tuesday. After seeing Monday had already turned, we didn't really have that fair value gap. We had already dropped below this, creating a market structure shift, also kind of disrespecting bullish raise. So currently it seems that we are having a bearish structure because of the market structure shift or the change in set of delivery. So we stand into this fair value gap resting here. So indeed the market can react off, but currently what we have is a bearish market structure. So there's no need for us to go against the trend. But we also have this other fair value gap below here, so I'll need to label these daily fair value gap over here. I want to make this really quick so that I won't waste your time, Mr. State. So having that fair value gap there, and I have really much more of a fair value areas, but I don't want to include that. But before even the market rallies to that daily fair value gap, the first draw on liquidity that the market will be rallying to will be towards this low. If indeed we are bearish, then this is the first low we want to see the market deliver to. Then later on, this is the low. Usually I want to check the how the news events is, but in this video I just not do that. So also what you're seeing is we have created that immediate rebalance whereby this candle, the current candle, has overlapped with this candle. There's no FEG, and we had that nice rejection. So with that rejection, I will be turning my screen upside down because I know maybe I can see, so I don't want myself to see, so I'll turn upside down after that. Yeah, trust me, I've done that because I want to let it load, then later on I can maybe try to see. So hopefully it has already loaded, then we can continue. All right, yeah, it has already loaded. And at this moment in time, usually I usually trade mostly during the New York session. So this candle is at around Tuesday 21. So Wednesday hasn't really played out, and this will be my target. We are in a bearish structure, but if indeed the market breaks through these consecutive down close candles by New York session, then I will be trying to look for these highs and maybe see how price will be reacting. So I will wait until the 5 a.m. because 4 hours until 5, that will be until 8 a.m. so I will play. So market pushed really higher. All right, so we have these by New York session, by the time 9 a.m. candle will be printing, what we could have already seen that is the market has pulled higher. We have created a market structure shift because we have closed above these consecutive down close candles, and we are forming displacement with fair value gaps, though we had that rejection. So if indeed we are bullish, because now from the 4-hour, what I'm seeing is there is no reason for me to be looking for shorts, whereas the market has just expanded. So I will be having these fair value gap here. The lower fair value gap to me is a kind of low probability for me. Even if you are bullish, then I don't want to see this fair value gap being traded into. We have seen that market structure shift was there was an early one displacement with fair value gaps. So even drop onto the 1-hour time frame, the level I want to be looking for buys is above this high, because that high has already been swept. But if we see maybe the market retracing deeper, I'm just on the sideline until we see maybe fair value gaps displacing below this one, then engage going lower towards this first target and this second target. But for now, I'm still leaning more of bullish of the 4-hour because there is no structure going lower. At this level, I will be watching how price reacts to that, and if price displaces above that level, then to me somehow I would like to see this high, which was Friday's high. But Monday's high has already been taken, so we have possibly this Friday's high that maybe the market will be gravitating to, and my entry will be taking it from the 1-hour time. So I'll turn also my phone because I want it to load, and trust me, I'm not watching these. All right, hopefully it's loaded. I don't know, hopefully. Yeah, there we go. Yeah, I just came immediately. So what I'm watching is how price maybe sinks into this 4-hour fair value gap, and then do we really react going higher? And if we start displacing off this 4-hour fair value gap and we start closing above this level, then I can start looking for trades going higher. But if we displace forming fair value gaps, then also I might wait for more confirmations for me to go shorts towards this low and this low. So I have if and then a statement because we're not certain about the direction, so I'll play one candle per. So currently what we've seen, we didn't really tap into that into that 4-hour fair value gap. The market just pulled higher. So with that, I can drop onto the 15 minutes time frame. Now try to observe how the 15 minutes. I will need to, yeah, this one, I think that cannot show me where how price had already printed. So from the 15, we can see these candles have been spooling going higher. We want to see how price reacts to this high. So we have this fair value gap. I want to play one more candle because from this high I wanted to look for buys, but let's see how the 15 react, because we can just see market spooling after sweeping this high going lower. All right, so sorry, my friend just came in, and so we are seeing displacements over here with FEGs. Okay, I'm fearing my friends to be coming, but it's okay. So we have these these FEGs. If we see some displacements, then I'm gonna be taking a position going higher. Okay, consolidation. Yeah, seeing that, now I think I can be in for a position. So yeah, long position at these point, immediately this candle closes. But where should be my stops be at? I need to identify maybe a higher time frame point of reference. Mostly my stops, I base them off the maybe 15 to 30, but mostly the higher time frames. So we have that fair value gap overlapping with that point, so that's not really an ideal area to have my stop loss. And my TP is always a 1 to 2. Let's see what we have over here from the 1 hour. All right, so that candle just closed because I had played maybe the first candle of the 1 hour. Remember, it's a 1 hour time frame, and we have 4 15 minutes candle to play, meaning the other 3 did retrace, but my stops wouldn't be at that point because I usually maybe at that low. Let's see whether I can have a 1 to 2. That's a 1 maybe to 4. Let's see, 15 minutes. Is that a swing low? Is that a swing low whereby we have that? Come on, so it's loading. All right, so I think whatever that is, it should be below here, but also let's see, 1 to 2. Yeah, really not intending to see any deep retracements, so let's see how these retraces, because if price takes me out, definitely we're going to be taking this loss. So around this area, it's a nice pullback in the market, consolidated for a while, then pulling back. I need also now to try and see, can I really manage my position? So pull back, this is around 13, so with this not really looking good. Yeah, nearly came there, but I think now we haven't really been stopped out, but with this deep retracement not looking good, then the market has pulled back. I think maybe these were, let's see, yeah, so with this pullback lower, that's why sometimes I'm learning that maybe triggering back or trailing back my stop loss isn't really ideal. I just need to trust my analysis where I have my stops and maybe be there. But the most ideal location I should usually have my stops should be at this low, right? But market came really close, then a spool going higher to that direction, and I will be determining now wherever the market is, I should be at break even. So we have the final target at that point in time. So if this high is taken, then I need to even maybe close 80% of my position. So the market rallied back. We need to identify those pullbacks or where we can anticipate maybe the market pulling deep into. Nadhani Nobo amefika. Nadhani ni boys amefika. Siko sure. Ngojea tu. So that was the position, a 1 to 2 R, though we had this deep retracement, and that's where I have learned to have my stop loss really safe somewhere that if indeed the market rallies back, then I can't be taken out. So if we have maybe the 4 hour and see why did the market have to drop that deep, because there must be a reason. So the market rallied really deep, but we didn't really tap into that fair value. We tapped into that high, the highlighted high, and then the market just pulled going higher. And at this position, I think closed on a Thursday, was kind of swing trade, and the final, this one, then the all-time highs I think were taken. So that's how I usually frame my trades. I can be having a bearish target or maybe bearish from the daily, but if you go to the 4 hour, you find that the structure is showing you otherwise. So adaptability is what I've learned to deal with and engage with how the market is telling me that or the market is communicating to me. So that is how I do it, and hopefully looking forward to maybe work with you.